Good evening, guys. Today we'll discuss one interesting company in the manufacturing segment, which is Garware High Tech Film. So, why I have chosen this company for discussion today is because company is available presently at a very cheap valuation compared to its historical valuation, and this is all because of the tariff situation which is currently there in the uh, there in place, and because of Donald Trump's 25% tariff, the market has punished the stock severely, and it is nearly down by 40% from its all-time high, and it is trading at a PE of 22, which was trading at a PE of around 40 in its peak. Now, why the company? Now we'll discuss why the company is trading at a very low, price as well as valuation, and how we can approach the overall things. So, what initially, at the beginning, we will discuss about the company, financial. Then we'll go to the product segment of the company and what product it offers and what the current situation is arising, and vis-a-vis the as competition, as far as the competition is concerned from the other countries, because the company is highly export oriented, and because of the tariff situation the company's products are becoming unviable in the US market. So in, companies is micro to small cap company. It is around 6,900 crore market cap. Its current price is 2,980, which was around 4,900 in its peak. PE is 21. Maximum PE was around 40 in its peak. ROE is 15%. ROC is 20.5%. Debt to equity is very negligible. So company is debt free, we can say. TTM sales growth is around 20% and profit growth is 30%. So company is consistently growing its profit by around 25 to 30%, and the company gave a very good guidance for FY26 initially, but because of the recent tariff situation, the company's company's remarks are like the situation is very unpredictable, and they are unable to predict further and growth will be, because obviously because of the tariff thing, their client in the US will obviously wait for the situation to settle down, and then only they will give their order. So the company is facing huge lack of order from the US side, all because of tariff, and company has positive cash flow, or rather company has been having positive cash flow. Now the situation has completely changed. Now we have to see what the company is able to perform after the tariff thing. Now, first of all, we know the tariff things are all negotiating technique from the Donald Trump side. If that it is most probably the tariff things won't be there what it is now, which is 25%, and it is supposed to get increased from 25% to 50% on 27th if US wants to punish India because of its buying of cheap oil from Russia. So it all depends on Donald Trump's mind, what he wants to do in the as far as the tariff is concerned. Now, how we need to analyze the stock presently? Now, company, a company has been in focus because since the you know since Donald Trump announced tariff on January or February, somewhere in that period. But in that on that time, you know on that time it was thought that India will be on a favorable side, because there will be a competitive advantage for India, because we used to thought, or rather everyone thought, that India will make a very good deal with US. Rather, India will be the one of the very fast country, because India would one of the very fast countries to make a deal with US, thanks to the relation that India used to have with US. But looking at what Donald Trump is doing vis-a-vis tariff, the situation is completely reversed, and now he has imposed one of the highest tariffs on India, which is only after Myanmar or very few countries. India is on the tops. India is one of the top countries which are having highest amount of tariffs presently. So company has been somehow surviving 10% of the tariff that it was imposed on the initial announcement by Donald Trump. Now that the tariff has been increased to 25%, and which is supposed to become 50% after 27th, company will no longer be able to maintain its market in the US if the situation remains such. But we also know that the situation, tariff thing should not remain what it is today, because India and US are strategic partner, and its relation have been continuously was built from neck to neck from 2000 to 2000, from 2000 starting of 2025. It cannot be shuttered like this because of tariff thing. This is what our assumption is, but only time will tell what happens to the relation. But if the tariff thing eases, the company will be able to perform better in the future. Now, retrospectively, we would think the price were very good, and why we did not buy the stock. So it all boils down to whether the relation between India and US will increase, become better or not. Now the stock has also been down by 40% nearly, and the US market, contribution to the company's revenue is also 45%. I think the stock is also, what we say, has come in the undervalued zone, or is nearly, is gradually coming to the undervalued zone that we look for. Now what the companies does is, it produces sun control film. Sun control films are films which people put up on their rooftop, so that the building gets lesser sunlight from the sun, so that it remains cool. And company also produces paint protection film, PPF, uh, which nowadays we see the exotic SUVs that is there in the market. Those who purchase those vehicle, they would obviously want their vehicle to remain colorful, like that, and not to be burned by sunlight. So they use paint protection film. This is a very high growth segment for the company, paint protection film, guys. And the Garware application studio, these are consumer facing division of the company. There is also one industrial division for the company, which are shrink film beverages, the beverage which are packed by shrink films. That is very seasonal, guys, because as we know, the beverage segment is highly dependent on the summer season. If summer is very hot, then the consumption of beverages goes up, and the company's revenue from the segment also increases. So it's a volatile segment. And apart from that, there is the company is also presence in electronic industry, and release liner and those kind of things the company produces. Company is also, guys, increasing its product from or changing its product portfolio from commodity segment to more so to value added segment. And in 2017, guys, the value added product used to be around 48%, and today it is around 87%. So companies, guys, continuously making the product portfolio more towards the value added side, continuously shifting from commodity segment to value added segment. So the margin will obviously increase for the company, and its product demand should also increase. Now, in the recent con call, apart from the tariff thing, guys, no other things were much discussed from the company's end, because we know that the whole situation has completely come under tariffs grip, and only tariff will decide what the revenue the company will report in the future. So what we need to do for the about the Garware high tech film, if we want to buy the stock, I think we need to monitor the stock and the tariff situation. And if we want to build some position, see, guys, the stock is only available at a discount when there is confusion in the market. And when the confusion is clear, say if tariff is withdrawn or it is lowered to 10 or 5% level tomorrow, the stock will hit a upper circuit tomorrow, and no one will be able to buy. Only when there is confusion in the market, then only the prices are low. And as the price have dipped by nearly 40% from its all-time high, and company was growing at company was growing its revenue at nearly 20% and profit by 30%. So since the company is available at a P of 21, it is available at a very cheap price. If the company is able to perform what it has been able to do so in the past. But because of the tariff, the whole things have become there has come a question mark, you know, against all all the past performances, whether it will be able to continue it or not. So we can see a very limited downside because its contribution from the US side is 45%, and stock has also dipped 40%. So we can expect nearly maximum of 10 to 15% drop from here at this point, and uh, we can safely expect that no more fall will be there after 10 to 15%. So downside is very limited, but upside will only depend if the tariff situation reverses. Then the company will bounce back, and if the tariff things remain such, then the company will its fair value will be uh, what it is today at this point, and it will go for a sideways direction, depending sideways direction, or it will gradually go down if the performances go down, and it will gradually go up if the performances or revenue gradually goes up. So it all depends on the tariff, and we have to think it from that point of view, and our decision of whether to buy the stock or hold the stock should be done keeping this thing in our mind. So that is all for today, guys, and see you in the next video with another interesting stock.